golden rule is a common thread among lots of major religions, but it's also misunderstood. Even the concept of karma is misconstrued. We think do unto others as we would have them do unto ourselves, or what goes around comes around. But could there be a hidden door within the golden rule that opens to reveal a pathway to the greatest adventure of our lives? Could karma have another layer to it than just cause and effect? What can we learn about money from these two concepts?
Now, there's a joke in the financial sector that has a lot of truth to it. And it goes like this. The golden rule is actually he who has the gold makes the rules. Ever heard that one before? You can use it when you're at the bar today.
When it's critical that it's always stated as he, that's the biggest part of what makes it true. Women still make less than men. Our net worths on average are less than men's net worths. No wonder men still make the rules. But the times they are changing, both in that regard and also in how we talk about the golden rule. We use that interpretation, do unto others as you would have them do unto you, as a great way to teach our kids to be nice. But we also have to think, I can't just do to others what I would want them to do to me. I got to do to them what they would like done to them. There's empathy and things that are being added to that rule. And then also the flip side of that, that as we do to others, so we do to ourselves, that we often treat others how we treat our own selves.
Now, I wonder, how would we act if whatever we did to others, we also did to ourselves immediately? Would we act differently if we immediately did whatever we were doing to somebody else?
Yeah. And I wonder too, what does this have to do with deal making? Our theme of May here on the podcast and YouTube channel. Stay tuned and find out how to make more on your deals by following the golden rule of deal making.
Hey, and welcome to the Wealth Wisdom Financial Podcast and YouTube channel. We believe when conventional financial thinking doesn't get you where you want to go, you need wealth wisdom. So hit that subscribe button. And if you're watching on YouTube, give us a like and comment below.
Now, let's imagine you walk into a room where there's a deal process happening already. You kind of walk in, you're there, you're dropped in to observe, but no one else knows that you're there. Your task is to discover who is the most powerful in the room to make or break the deal. Who has the most power?
Is it the tallest person? I mean, I've seen some people who actually wear high heels, women, of course, to
maybe men
make
too,
themselves more powerful. Is that it? No, I mean, I don't think so. Height has no sway in most deals unless it really relates to basketball or the Rockettes.
I will give you a sneak peek into women's minds. I know you're not Mel Gibson, Brandon, but this little sneak peek. Often women wear heels to increase their own confidence, their internal power to empower themselves. I love that. If wearing heels and being taller in the room helps you feel more powerful, do it.
So could guys wear platform shoes?
Yeah. If that's going to help you have more confidence in a deal, make it happen.
There you go. Okay. Platforms, guys, and not heels, but platform.
Okay, now the other thing that people try to do is be the smartest person in the room, to have the most intelligence. So if you're in this room seeing this negotiation happen, and are you going to look for the most intelligent person in the room? Now, if you've met the master deal makers, they'll be the first to admit that they usually aren't very intelligent. I've heard many of them say that, and they kind of play down their smarts. And then I've seen a ton of intelligent people, very smart people who tend to overanalyze the deals, get stuck in analysis paralysis. And then in some way, shape, or form, they just end up destroying the deal because they're just too intelligent. They're too smart.
Yeah, thinking through it. Yeah, I see both of our strengths and weaknesses in just those comments there, and where I'm like, oh yeah, I've been there, I've done that, and I've seen that on you and with our 4-year-old. Right? We did talk about that last time. So go check out that episode for that fun story. So we venture to guess that the person with the most power in the deal is the person with the most money too, probably. He who has the gold makes the rules, remember?
Yeah. So why would we put that out there? Why would we guess it's the person with the most money in the room that is going to have the most power in the deal? We've got 4 ways that bringing more money to a deal negotiation can help. There's a lot of ways, but we got 4 of them for you today.
Number 1, it can increase leverage and bargaining power. You can get more favorable terms, lower interest rates, lower prices, and so much more when you have cash available, right? It's like how the big corporations get bulk discounts because they have more money to order in large quantities, right? Or how having a large down payment for real estate can lower your interest rates. We've actually done that.
Yeah. And so that's first. Second, having more money to put into a deal can demonstrate commitment and willingness to invest in that deal or in that relationship. Like earnest money, when you put an offer in on a house, bringing more money to the deal shows how serious you are and that you should be taken seriously. Being able and willing to put down a deposit for an order of goods or services can be a total game changer in terms of the level of friendliness that you experience during the deal too. The people who have already paid a partial payment up front are going to be treated very different than people who have not put a dime into the production of their goods and services first.
Also, having money available can help overcome obstacles. As people who have been self-employed since 2011, us, right? There's often an obstacle when it comes to qualifying for loans. You don't have the experience or the business, maybe we had the experience, we just didn't have the history on paper.
Well, or we're being smart business people and trying to keep our taxes low. And so we show little income, and yet the banks want us to show a lot of income. It's like a catch-22.
Yeah. And we talk with people all the time about this. We found that having more money to bring to the deal often opens doors at banks rather than seeing them slam it in our faces. And they have literally, I don't know if literally, but they have pretty much slammed it in our face. Likewise, having some margin in your profit calculations can help you increase a purchase price and sweeten the deal for the other party when they show signs of backing out. So you're able to put some more money in to make sure you get that deal.
And then finally, having more money to put into a deal can create more opportunities for deals. There's a corollary to the golden rule: he who has the gold makes the rules. And that's this phrase: opportunities come to those with the cash available to take advantage of them. When an office situation wasn't working out for us, we saw the opportunity to purchase our own office and take more control over where we worked rather than just moving to another office where we paid a lease, and a monthly rent to somebody else. We wouldn't have been able to take advantage of that opportunity had we not had cash available. Go back to our last point about how being self-employed, and working with banks ends up working out.
Yeah, right. So it's important to note that bringing more money to a deal negotiation is not always a guarantee of success, right? It doesn't always lead to what we want. Negotiating is a complex process that involves many different factors, and there may be other considerations beyond just the financial aspects of the deal. And that's coming from people who are in the financial world. It's more than money. It's important to approach negotiations with a well thought out strategy that takes into account all of the relevant factors and objectives, not just, rate of return, money, and all of this, but how does it go into other aspects of your life? I don't know, lots of things.
But on this specific idea that having more cash to bring into a deal can be super helpful, we want to acknowledge all the naysayers that we're starting to hear through our headphones screaming back at us via the interwebs.
Yeah, they'll say it on Reddit or in the comments, right?
Yeah.
What are they going to say there?
Yeah, here's what they're saying. Keeping cash available is losing money because savings accounts or boxes under your mattress, they don't keep up with inflation. You're silly if you keep cash available for deals. What are you talking about? And so on and so forth.
Yeah, so you don't need to write that there. We just said it for you. Our response is easy. Well, then you don't know where we keep our safe, easily accessible money and see it do better than inflation over the long term. Where is that? It's a properly designed bank on yourself type whole life policy. Yes, you heard that right. The growth is great, and we get these additional benefits too. Now, again, you're going to cut off and say, I already know this, but keep listening here because I'm going to share with you some stories, not just our own story, but others where they've actually used this concept to grow their wealth in other areas.
Yeah, but let's talk about those other benefits. Tax advantages, unlike a savings account, we're not getting a 1099 every year, whether or not we use our cash value. In fact, we've had our policies for almost 10 years now, never gotten a 1099. Pretty great.
Number two, there's a death benefit. With the savings account, only the balance can transfer to your heirs. Our death benefits are many times larger than our cash value, and that's tax-free that they're going to get. And it is a multiple of what we have saved there.
Yeah. And then we still get the same growth when we take out a policy loan. If we were just using our savings, the interest rate on our funds goes down when we pull out the money for the deal. Actually, the money that we're pulling out, we lose all the interest we could have gained on it. But with these types of policies, the full amount is still doing its thing within the policies and in the deal. Our money gets to do two things at once. That's pretty powerful.
I mean, those three benefits are good, but for us, the most valuable part of using the bank on yourself concept is safe, easily accessible funds to use wherever and however we want. For us specifically, it's to grow our business. We can use them to buy real estate, which we've done. We've used it to invest in our business. We've used it to pay off debt, enjoy life now for a big, nice vacation along the way, all while building wealth for our futures and for our future generations that they don't even exist yet. It's a game changer, quite literally. I mean, again, poor people plan for Saturday night, rich people plan for 3 generations, and we want to help people plan generationally, not just for Saturday night.
Yeah, we could talk a lot about this concept called bank on yourself.
Now, we only talk about it so much because it's totally transformed our lives in a positive direction. And the more we learn about it, and we continue to learn, the more we see possibilities and opportunities. Remember, it's infinite. It's something we believe more people need to look into more seriously and consider.
Yeah, Brandon, I know you've got a recent story as you're pulling up the text message that your client sent you that you've gotten permission to read to, our audience here. It's a great example of how the flexibility of safe, easily accessible cash can change people's lives and their ability to do deals. So go ahead and share that.
Yeah, so I got to say, I was at the gym working out and got this text from one of my clients, and I was just excited for him. Right. I didn't even know this was happening, which is really encouraging. And he sent me a picture. He says, in a curveball, I'm finally buying my lake house, personal use and vacation rental all in one, using my policy as the down payment, policy cash value as the down payment. So he's able to buy his dream that we talked about years ago. He's making happen, and he's not old by any means. And he says, going a little further, bonus story, he says, I'm selling a long-term rental property that he originally bought with policy cash value and using the profits to buy everything to get that one started. So he's done this multiple times. So Amanda, break this down. What did this guy just do? You can read between the lines, what he did, but you can make it easy to understand for our listeners.
Yeah. And I believe he just started his policy within the last 3 years, right? Yeah. Cause I remember
3 years,
it was like,
he didn't wait. He had the cash available, not 10 years later, but early.
Yeah. So, because I remember talking to him after the pandemic had already started. That's part of how I knew it was like within the past 3 years. What he did was he had some cash that he put into a whole life policy, properly designed by yours truly, us too. And then he took a policy loan to purchase a long-term rental. And over the last 3-ish years, that long-term rental has appreciated, he's also earned income on that rental.
Yep.
And he's used some of that income to pay back the policy loan a little bit, add more premiums to his policy, those kind of things. But meanwhile, the full value is still growing. So his money has been growing in the equity of the home and growing in the policy. And now he's selling the long-term rental. He funded the policy with some of the profits from that sale, and
Yep.
he's turning the growth that was within the policy and the growth within the long-term rental, both of those now into his dream of having a lake house, which he's still going to use for more income and making money by also making it a short-term rental vacation use. So if that story is not inspiring, I don't know what else is going to inspire you. And I don't know what you're waiting for. What deal would you like to have more control over the rules of how that deal happens? The preparation process starts long before that deal is in front of you. And it starts with a 15-minute intro call with one of us. You can schedule that call at wealthwisdomfp.com/call. You are going to find lots of naysayers out there on the internet that tell you other ideas. You're going to find people that are big champions for the bank on yourself concept. The only way we believe you can decide if this concept is right for you is to work with a true professional, go through a very simple process. Doesn't take too long to learn a little bit more and confirm if it's right for you or not. Just make sure that you do that process with a true professional, a bank on yourself professional, which Brandon and I are. We're proud to say that. And that process starts with that 15-minute quick intro call. We'll simply answer your questions and talk more about what all is involved in that process to see if you're open to going through it. Again, you can schedule that at wealthwisdomfp.com/call. And if you're one of our clients who listen and you've listened this far, if you're like, what's my next deal? How am I preparing for my next deal? We'd love to talk to you about that too. You can schedule that same call, or I think you know how to reach us too.
And if you are a client or you've been a part of this and you want to share your story, share it with us. This was super encouraging for us because I love seeing people win, not just in their policies and growing that, because I know that's gonna win every day, all day. But how are you using it? And that's just encouraging. And it encourages other people's to think infinitely in the ways that they build their wealth. So thanks again for joining us. Don't forget, hit that subscribe button and leave a comment, rate, review, do all the fun stuff, and live long and profit. The topics presented in this podcast are for general information only and not for the purpose of providing legal, accounting, or investment advice. In such matters, please consult a professional who knows your specific situation.